Hello guys, in this video we talk about history of the FDIC. FDIC means Federal Deposit Insurance Corporation. What is FDIC? The Federal Deposit Insurance Corporation is an independent agency that provides deposit insurance for bank accounts and other assets in US. If a bank fails, the FDIC was created to help boost confidence among consumers about the health and the well-being of the national financial system. You may know what the fund in your checking and saving accounts are insured by the FDIC, but you may not be about that the agency history and purpose. The FDIC was founded in 1933 after the stock market crash in 1929, and it continues it involves and the alternative ways to protect deposit holder against a potential bank and in insolvency. Learn more about the history of the FDIC about the changing on the years. The founding of the FDIC. American financial market lay drained by the early 1930s. More than the 900 banks failed by the March 1933 because of financial chaos triggered by the stock market crash on October 1929 and the worst economic depression in the modern history. In March 1933, President Franklin D. resolved the address Congress saying on March 3, banking operations in the United States request to review the times of the cause of the failure of our banking system to in unnecessary. Suffice to say that the government has been compiled to stop for the protection of the disposer and the business of the nation. Congress took action to protect bank deposits by the creating of the emergency banking of 1933, which almost formed the FDIC. The FDIC purpose who was to provide economic stability or to falling the banking system, officially created by the Glass Act of the 1933 moderate after the deposit insurance program initially educated misjusted. The FDIC granted specific amount of checking and saving deposit for its members bank. Beginning year of FDIC. The period from the 1933 to 1983 was characterized by the increased lending without a proportional increase to loan losses, resulting the significance of the increase in the bank assets, leading to increase 19 to 60% interest rate assets to 1947 alone. By the 1950 the rate of loss 40% and again to 50% by the early 1960s. The FDIC was not without the criticism. It was originally documented by the American Banks Associate as too expensive and the artificially way to support bad business activity deposit. This the FDIC provided this screen success when only national additional bank closed in 1934 due to conversation behavior of banking insurance and the zeal of bank regulated deposit insurance was regarded by the some as less important through World War II and the subsequent period. These financial experts concluded the system became guarded and were impending natural effects of the free market economic. Nevertheless, the FDIC continued. FDIC timeline from 1932 to 1980. Here are some notable items of misstolen for the FDIC independent 1983. 1933 Congress create the FDIC. 1934 Deposit Insurance Coverage. The initially $2,500 and the release by the measure of $5,000. In 1950, deposit insurance increased to $10,000. The fund establishment for the bank of the receive credit of the success assessment above the information insurance losses. 1916 FDIC insurance fund passes $2 billion. 1966 deposit insurance is increased to $50,000. 1969 deposit insurance increased to 20 lakh dollar. 1974 deposit insurance increased to 40 lakh dollar. 1980 deposit increased to 1 crore dollar. The FDIC insurance fund in 11 billion. Banking operations started changing the 1960 financial situation Financial institution become the taking that neutral risk and expanding the branch network territory or relaxation of the branching laws.